All right, it's been a fun day so far. Welcome back to our channel. We've got quite a bit to talk about, and I'm having someone fill in for Matthew as he's out golfing on some exclusive golf course somewhere. I'm jealous.
Me too. Fun day so far.
Not that I'm into golf, but I love being outside. You know, if it were me, I'd be like jetting off to some mountain bike trip in Whistler or something like that. That'd be fun.
Yeah, absolutely.
But long story short, we got price action to talk about, and it's always nice to have like a kind of a co-host host scenario because we bounce ideas off each other, and that's what a trading community is all about in the first place, is to just thrive together and have more eyes on the market, and spotting opportunities sometimes takes a few pairs of eyes to get in there. And I even love taking feedback from some of the members of Bullish Bears, as well as anybody who chimes in with comments on YouTube. We do this by request. Don't call Kramer, call us. We will actually look at any ticker you want and give you the dope right here on the screen live. We'll walk you through all the technical analysis we can see on it. And by request, literally, we're down for it. I had a few that some members were asking me about this morning, and they seem to be pretty relevant because there's a few plays kicking off on some stuff that's kind of been flying under the radar for a little while and is looking to make a little bit of a bounce. I'll go through a couple of them, then I'm going to jump into your side. You got some crypto stuff going on that's actually starting to kick butt, so we'll get into the mix of it. First off, I'd like to introduce you to my guest, by the way. This is Howard Greenberg. He's over at the QM. He's essentially their producer. And kind of cool to have for me, a humbling name with me here every week that I can. I mean, the fact that I'm here live twice a week with a ETF fund manager is prestigious enough. But then to go and catch someone who actually is a producer of a very soon to be, it's already a successful network and platform. So I guess give us a little background real quick, if you don't mind, and then we'll get into some trades.
Sure. So I work for Quasar Markets Live, or Quasar Markets, but I run Quasar Markets Live, which is their YouTube and streaming channel. We're a fintech platform that is really trying to educate traders. We're trying to democratize it for everybody. We're not trying to do a Bloomberg terminal that costs $10,000 a month. We're trying to give you something that for a very reasonable price, you're able to come in and get everything you need to trade. Previously, I worked for Prosper Trading Academy. I actually have one of their vests on right now because I was a little chilly, and did something very similar to you where I ran a trading room. Mine was on the crypto side. I'm the president of the American Blockchain and Cryptocurrency Association, 501c in DC, that works on regulation within the crypto industry and adoption at the federal level. I worked with the FDA when they were doing food tracing with blockchain and things like that. So cool. Really excited to be here with you, Jeremy. We put your show on live on our platform twice a week, and you guys have been nailing it.
We love price action analysis, and when you do it for a while, you get good at it, and there's a reason why we can make a living doing this. That's literally what we do. We look at charts and we make trades.
Absolutely.
Bring in again, that sense of community. You get a few people who are successful at that, and you can not just make call outs and give a bunch of fish away, but you can also teach people how to fish. So education above all. I love helping others to help themselves. And personally, I mean, my rags to riches story, it stands. I started trading with $5, back in.
That's amazing. I wasn't quite there, but same thing. I was in the restaurant business as a bartender. Heard about Bitcoin through Big Beat, our man over at Quasar, the founder and CEO. Started trading from there, and after a few years was asked to join Prosper Trading Academy and really dive in full head, as a full-time job. And I love helping people too. What you guys are doing is immensely helpful. Many people charge a lot of money, and I can tell you that because we talk to these folks every day that want to get on our platform, and we're not looking for the folks that are just out there to not give back. We want to partner with people like yourselves and Matthew that are looking to help traders. That's what this is all about.
Absolutely. We believe in paying it forward, and the simple fact that as Big Beat would say, the rising tide raises all ships, and we're all in this together. And if we can not necessarily go out and influence each other or try to sell something, we're actually supporting each other is what it's all about. We love to be able to be kind of the foundation of that, and not only teaching others how to trade and actually make a living at it, but to help others. I mean, for every 10 people I help, maybe one person will go on and help 10 more people. That's my hope.
Absolutely. And we all learn from each other. Like I said, I'm going to have you on to talk about your wheel trading technique because it's a little different than others. And I think it's, great. So I want to learn more about it. And that's what I love is, if you're smart in this business, it doesn't matter how long you've been doing it. There's always new tricks to learn from different educators and different folks that use, different techniques to make their money.
And it's when there's proof in the pudding and it's tried and true, and it's something that's different and something from somebody like myself. I don't call myself a very experienced guy. I mean, I've only been trading since about the end of 2017. There, I know people with decades who don't trade the wheel trade this way, and it's a different approach to it. But it's more of I kind of meshed price action into the wheel trade a lot less passively than others would. Let's just say that. But I'll get to that in a moment. We got some stocks to talk about first. Looking at our general watch list, and we've kind of picked off two in the group this morning. We talked about two. I was asked to do a little bit of dope on them, and let me get those out here on the main grid so we can see them. I like a big chart. There we go. Get the 2 hour walking up. First one I wanted to talk about was actually SoFi. This thing, one of our members pointed out a setup on it. I'm going to look way left on this thing. So even further, market structure did its thing. We got the basic hype wave of the capitalization, the first and second mean reversion trades, and then we got this entire capitalization here. First consolidation, squeeze, second consolidation, trend, blah, 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 blah. Back to the reversion here. That's done. Now we've got a second scenario where we're starting to set up another trend here, and we're starting to look at some key areas. And when we get down into the weekly chart, we can see there's a pretty good reversion idea right in this range here. It's attached to the top end of this wick, but there's better stuff to the left that it was originally attached to. I moved it. But right in here, we got to an area of consolidation where we saw the liquidity picking up. A lot of buyers came in and took it over here. You can see the size of that wick is exact right in that range. And now we're consolidated into a measured move where we got an outcome target. We've hit the halfway mark with a wick this morning and kind of pulled back. If we can melt through that, get above like 870 on this thing, we got a pretty clear shot at about $9 coming out of this for a 1-for-1 measured move. And so far is holding some pretty good bullish range. I mean, we've got the price action behind it. We've got the accumulation exactly where expected, and we're playing out. SoFi is kind of coming back. They're kind of a disruptor in their own sector, and we're starting to see that reflects clearly on the chart that they're making some headway.
Yeah, I mean, they were always a good company. They might have got ahead of themselves a little bit with valuations, and that's what caused that hype cycle to kind of come down. I like what you're saying there. It accumulating at a base and ready to make its move back up to the upside.
It eventually happens, and some of the biggest names out there kind of started the same way. They get a little overhyped sometimes and get a little ahead of themselves, and that's how it goes. And when we pick off the price action coming back, we find better value investment spots than most people who chased it. And then knowing where all the bag holders are is a theory of mine. You just look for the big wicks to the left, and that's where they are.
Yeah, no, absolutely. And you can see, the question is going to be, is former resistance turn into new support here on this one? Because I'm seeing some pivot points back in October of 23, 873, 848 in that range where it is right now. So can we turn that into support? We see that a lot. One of the biggest, strong movers to send something up is when you see that. I'm looking back at like October 13th rather or so, 873, you see a pivot point, 848 back on November 3rd. And then even here, $8 at the April 24th, 806 in July. So yeah, you're right in that spot where that could really turn into a good support level here for SoFi. Yep, just what you're drawing out there. That's
in that entire range.
Itself. Yeah, look at that.
It's
That's it.
methodical,
I
man.
mean, that looks like Bitcoin. I have a lot of experience in charts that look like that because that is the life cycle of every crypto at this point that made that huge
Yes.
jump up and then did it. And what I'm telling you right here is that that's what I see. That I'm looking there and saying, hey, even to the downside, even on a retracement down to that $8 level, I love this. If you're not in it now, maybe look for that retracement to the 8 level and play it off of there.
It's looking good. Plus, I've pointed out before to a couple of our members who came into us after having chased that hype wave. I mean, there was a gal a couple of years ago came in. She bought the peak up here around $23, and that was around this time she became a member. And I'm like, well, you can plot the edges of this range and more or less wheel trade this thing if you're willing to add here. Selling some puts, you might get assigned, and then sell some covered calls when it hits the upper end of that range, and use the premium to recover from that $23 cost basis and eventually catch up to it. I don't know where she's at now. I haven't heard back from her. Been about a year, but she was starting to make progress towards that before I last heard from her, and that's kind of right to my heart because you can take a wheel trade and use it to reduce cost basis, even if you're in the hole like a huge amount. It still does play out. And
right, you're not just you're not waiting just for the price to recover. You're trying to earn premium and like you said, bring your cost basis down on the way up.
And it's if it's something that you wouldn't mind already owning in the first place, because everybody kind of sees what SoFi has to do as being a disruptor in their sector. If you wouldn't mind owning it anyways, you might as well. Instead of averaging down and buying a whole bunch more shares like everyone else was, use some premium, get paid to add more.
Right. Use it. You already own it. Let it earn money for you. That's what I love about your technique is that basically you're putting your holdings to work for you.
Exactly. Let it pay you back. And I can't quote exactly where it stems from or who it stems from, but the matter of don't buy anything that doesn't pay you back. Prime example, and that's exactly how you do it. Generate income from it. Rent that thing out. Another one we were looking at is where'd it go? In this kind of the same sector, different scenario. SQ, same thing. Only now we've got basically there's your hype wave and your capitalization. The market structure did its thing. Second squeeze here. We're kind of in the same boat. As SoFi, we're looking for a breakout above range. We're right in a mean reversion area on the weekly, and that's just right into this liquidity zone. I was talking about this last week and the week before a little bit, and now it's starting to play out. It's above its resistance, looking for liquidity, short-term price target around $72, and then follow through would be expansion into probably the upper range here, which was a previous, there's a fib level here that I striped a pivot on, about $78 is a good sized outcome. But I like to look a little bit short of that for traders. Profit would probably be better taken at about 76.5, right about half a measured move above the liquidity zone.
That also matches up to the pivot point in beginning of May, 76.50 upper pivot point.
Exactly. And I see, every time I see a wick, I know where the bag holders are. You break that area. If you break it as resistance, it's almost a certainty that price tends to come back down and test that previous resistance as support. So that's why I always say if it overshoots, give it a half measured move target. It'll usually come back, consolidate, and then maybe finish the move to the upside. Overall, super long-term stuff. I put my long-term price targets in purple, $89. Look left. Where does that stem from? That's just the upper end of range for market structure consolidation. So, that's within reason. And, a full mean reversion of this, it's way the hell up there. I'm not going to put lines on there. I don't want to give anybody false hope. But
yeah, and I will tell you on more of a fundamental side of that, block, which is what it's called now. Obviously, it was Jack Dorsey's baby.
Yeah.
Heavily invested a lot of money during this downtime into Bitcoin mining in Texas with renewable energy that's now coming online. So you could see some news along with this price action. I love when those two things match up. So something to keep in mind if Bitcoin starts to move up, Square tends to be a proxy a little bit for that, not to the level of, MicroStrategy or others, but it definitely is Jack Dorsey is one of the biggest Bitcoin maxis out there, spending a lot of money working on also Bitcoin layer 2 solutions, things that will allow Bitcoin to be used in everyday purchases.
Eventually, if it's stable enough, it becomes a usable currency.
Yeah,
There's people
absolutely.
using it for that now, but it's just like, would I rather put my bank in dollars or Bitcoins? And I'm always kind of like, I'll trade Bitcoin because it's volatile. I trade anything that moves. But I don't necessarily trade the dollar, although I sometimes use the index as a hedge. It's a long story there, but
Yeah, DXY is always important.
yeah,
Again, in the crypto side, we always look at DXY because as it goes up, Bitcoin tends to go down. It's similar
exactly
to yields and stock prices.
the same. One and the same. They kind of track each other almost.
Yeah.
And looking short term here, I always look at the 2 hour. The prime and secondary moves already done. I would look for some consolidation in the $70 range, and then maybe we push on through to that liquidity zone. So it's looking fun. All right,
Yeah.
on to your list, and then I'm going to review a few from last week. So we got a couple interesting ones in your end, and you. I'll start with the two, and then we'll go back to IWM because I want to talk about TNA when you talk about IWM. But Mara, I mean that thing is it's kind of I call it FOMO fueled sometimes because I'm a little bit anxious about trading Mara. I always kind of have been, but I've been pretty good at calling out price targets on it for our members. Previous dope, I've got lots of range areas that I pay attention to, but you've got a pretty good idea on this one where it's likely to consolidate here and then make a push back above that 16 range.
Yeah, 1450 has given solid support to start accumulating to make a move, and it's made multiple moves. If you look back here, almost every time it's hit that 1850 target. It hasn't really stalled in between. So if you can get that accumulation now, you've got a good spot for it.
Agreed. And that was at one point that was a 52-week low, and that was a key area for support. And then you go into the 4 hour on this thing, and you can see it's printed reversals around that range, and then just plotted out for some big boosted moves. And then there's a primary.
And like you said, your risk reward, especially at that 1450 level, gets real nice, right? You only have a little bit of downside that you're sort of setting your, if it breaks below a 52-week low, then you'd stop yourself, I would hope, out of your trade and be done. But that's a nice risk reward to the upside.
And then short term, I mean, we look at there's a wick full of short bag holders here. So if it squeezes, that's where we're going to look.
Yeah, absolutely.
Probably plot a short term zone right in here. If I'm looking at this right, we've got it's a little gappy, but you see there's a primary move here, accumulation, and this one was red. This is a key support area where if it was critically broken, this is where this was going to break down. That's when I last analyzed this thing. But here we've got the same thing, just a little smaller, and you can see it's a tightening range overall. But we got a primary, accumulation, secondary, hit right to that spot, bounced right back out, gave the half back. Half-back trades are methodical, man. They're the highest probability trades you can make as a reversion trade. And that's done. When it does it twice, it's even more nice because usually it becomes a key resistance area where you get a breakout. So if we find support in this area around that $14.80 to $15 area, I think is probably key just based on the previous wick. If we see a nice reversal down there and then we start to trend above the previous danger zone where I mark it in red, I call it the danger zone. Either Topper Harley or what's the Maverick will take the reins and fly this thing higher.
Yeah, it's a lot of blue sky at that point.
Pretty much. And, a full-on resistance play back to previous accumulation after market structure is right around 1870. So that's a pretty good shot of running a trend out of this short-term action to get there. So I'm liking the setup here.
I will point out I do see a little bit of resistance in that $16 zone where you have the 200 MA on the hourly. We'll give it some things. So there's some spots, but, again, that's a nice move up even to that point.
Agreed. It's set up for it. And then I've got the infamous diamond pattern noted out here too. I didn't draw it, but you can see where we're on the compression side. Yeah. Usually when those break, they give you range targets. And if you just drew a angular from here to here, it would act similar to a wolf wave. It would give you that 1870 outcome later in the future. Same. There's many ways to get to price targets, but we simplify them. So Awesome.
Yeah,
I kind of like that one. I'll keep that one on my radar too.
absolutely.
And then you wanted to talk a little bit about I guess Matthew and I have been calling this the 300-pound gorilla in the room, MSTR, man. That
Yeah,
thing,
I know Matt has his leveraged ETFs up and down on that right now. Um, it's a proxy for Bitcoin in a lot of different ways. It tends to have a nice move on it. But what I'm seeing there is, again, you've seen a lot of support at what was previous upper pivot points in early August, that 180 level. And I could see a pullback to 175 here first. So that's what I'd really like to see. But we saw that with strong resistance in mid-May, mid-June area. And, what I love is that flip of resistance to support. And if that can play out here, and especially if Bitcoin falls back towards that bottom trading range near 55K that I think we've got definitely still in play, you will catch a bid there and you could see it really move to the upside, and it's if it breaks that all-time high, watch out.
yeah, that thing will scream if it breaks that all-time high. And I pulled up the daily chart and zoomed way the heck out on this. I might even throw a weekly chart on this. That's one big consolidation, guys. I mean, huge.
Yeah, and the other thing to keep in mind there is, Bitcoin ETF inflows. This tracks so much with Bitcoin. We've seen these ETF inflows into Bitcoin. And for those, again, I throw fundamentals in with technicals a lot when it comes to crypto because you kind of have to a little bit more than even stocks. And the halving was in April. 8 to 10 months after that, supply starts to get a little bit crunched, right? You're making half as much every day than as you were before. So now that equal volume, if you take a look at the volume on Bitcoin, it's been pretty steady. It's looking pretty nice on the daily chart. You watch that volume. If we see a Bitcoin ETF take off like we did a couple of weeks ago, you'll see that push up and you'll see this thing run. That's what I would point out is that's really what I would look at is, Bitcoin's in a symmetrical triangle that it's been in, now since August. And what happens is leverage builds up on both sides of that area because of the way the perpetual futures work. And what we tend to see is you break that symmetrical triangle one way or the other and it's explosive move. I tend to think that the explosive move is going to happen to the upside. I do think we have a little short-term downside that could hit you first. But from there, MSTR has got some nice room to run here.
We used to be able to see the, maybe not so much.
There it is, volume.
But basic volume, there was a way to see daily volume on the side where you could see.
Oh, yeah, on the like a VPVR, yeah.
Somewhere in Webull, it's there. I've used it before. I just can't remember where the heck it was.
Yeah, I don't use Webull, so I'm not sure on that one. But yeah, that's what's nice when you can lay that on there.
I'll find it later, but I know there's a volume node right in this range on MSTR. Last time I looked, and it was just a dead zone all the way up past that. So, like, if we blow through that resistance, it'll happen fast. It's not going to slow down. It'll be very gappy like it was back here.
All it will take is a liquidation of some shorts on the Bitcoin side due to the ETF inflows. What's nice is I'd be watching that thing right at 9:30 every morning because you'll see it start there. You know what I mean? Is look for the IBIT to announce what they just, reconciled from the day before.
They'll typically give you the clue. And that's the way to look at it. And things happen really fast from there. So when you get just the right alignment, everything just cooks. Yeah. I like it. That's a good setup. And then, not to we'll look at MSTU. I mean, this thing is, I don't know how the heck he maintains such an efficient way to keep 2x leverage on something like that. But it's incredible how efficient he is at it.
I agree. You and I were talking about that yesterday a little bit together because it is such a complex thing. Some people, it's not, again, I come from the world of crypto where there were these 3x Bitcoin products that were available overseas, and they were just mathematically done. There was some supply and demand there based upon, of course, the trading of the actual units, but it was staying in place based upon using math, not using actual shares of something to do this.
Right. And then the way it's leveraged, I mean, he's running it to where it kind of builds into the swaps. And then if that overflows, you end up in the options. And it's just, it gives you kind of an extended amount of leverage to be able to maintain that. but to keep it exactly, I mean, it's actually slightly more efficient than 2x if I've done my math right. It's usually a little higher percentage. Like if you pay attention to the way the percentages move alone, like let's say MSTR makes a 2% move. This will be like a 4.02 or 4.04 percent move, respectively. So it's kind of interesting how it's slightly more efficient than 2x, but it's like never below 2x. I kind of love that.
Right.
I don't
And
fully.
I'm layering the two on top of each other using TradingView, and it's amazing how close they are.
Yeah.
Even on an hourly chart.
Yeah.
I got it up on an hourly right now.
It just tracks.
I mean, it's unbelievable.
So I mean, he's really good at it, and using swaps to leverage it. I don't know how to make that all work. I can do it with options, sure, but
you and I both talked about that yesterday. Yeah, we got to get him. We got to drill him a little bit more to get exactly what the secret sauce is. If he'd share it with us, because it's amazing.
That's proprietary. I think he needs to put an NDA on that.
Yeah.
Because I mean, this is something that works so well. It works better than most other ETFs that I've seen, and that's not even talking about the management fees involved. This is like the pure efficiency of the price action itself is just phenomenal. I still can't get over it. It's great.
Yeah. And I know I trade in quick and out, so I don't care about the management fee.
Right.
If I'm not holding it for a month or two, that management fee isn't going to affect me.
Exactly. It's not like it's a zero-sum game altogether. Like something like UVXY is another one I love to trade. And this one I've currently got some put debit spreads going on it at like November expiration, just short term. But I mean, this one's like whack-a-mole. I mean, the weekly chart, disgusting. The daily chart. I mean, it's just every time it pops up, you just smack it down with puts. It pays it's pretty well.
It's a broken instrument. I know Matt says that all the time. And again, the guy that is my option guru at Scott Bauer, he talks about it all the time, the inefficiency and the incorrect way. And the other part is a lot of people look at VIX wrong because they don't look at the actual futures. They look at the current spot it's at. And you've got to be looking at what are the futures selling for next month or the month after. So
exactly. And then there's you get into looking at all the futures options breakdown on it, and it's like you kind of print the expected move pretty well, and it's at least efficient at doing that, but it doesn't.
Well, because the mean reversion is to zero.
Right. Exactly. So I mean, it's like where does it break? It breaks whenever it pops up. That's just
exactly. If it breaks 20, you start. That's when you want to buy puts.
Exactly, and it's pretty good for using it as a lighthearted hedge, so to speak, because it plays on the fear index. It doesn't play on like anything that's actual. It's just basically emotional response to the market moves is all it really is. And when you look at a chart, you're looking at a piece of psychology anyway. You're looking at how people feel about something. So this one's just a little easier to read than most. Okay, if it pops up, everybody's afraid. Eventually, they calm down. Smack it down.
Yeah, and the other thing I'll always say is you don't want to buy VIX when you need it. You got to buy VIX when things are just calm. When it hits those irrationally low levels and it gets down towards the 10s, that's when you buy protection.
Exactly. It's an insurance policy, and that's where I lean so much on premium and like. With the strategies I use when I'm selling options, I'm trying to sell the edges, but I'm trying to sell the edges while price is close to the edges. So it's like I'm kind of in a way playing on an emotion or selling FOMO to someone else. And that's there's always a loser on every winning trade, I'm sure, but at some point the brokerage takes the hit on most of that anyway because they've got to be able to be liquid with it. So. It's not such a bad thing when you can go and sell premium to somebody on the speculative side. That's why selling options is such a great idea, is because speculators are always going to speculate, and if they're still doing it, they're eventually making money at it. But if you're on the sell side, you're almost always making money at it. So it's just like being in the house and selling to the chips to the casino, I guess.
Absolutely.
And then there's IWM. And we're expecting some explosive moves on both sides of this thing. And if you look at the daily, I mean, that's one big choppy range of consolidation. And
It has been. It has definitely been. And, this one is a two-parter for me, 200-day MA it's coming up on. And that's just been, historically a great mark. And that's right now at about, 213.91 or so. And this morning, I was hoping it was going to hit it. That's where I have my actual entry set up to go personally. It didn't get all the way to that wick, so now it's going to run on me because I didn't get in on that.
Oh, you're using an EMA. I'm using an SMA. Difference.
Yeah, sorry.
I got 204.63. Same, similar enough. It's right in there, and it was in a trading range that I was trading a long time ago, back in back in May. Dang, been a while. I kind of I think I was tracking it for a couple day trades is the scenario here, and then my biggest wheel trade position today is TNA, which kind of tracks this pretty well. But every once in a while, I'll make some day trades on IWM because the options are just very inexpensive to trade if you want to take the speculative side of things.
Yeah, so, it doesn't have a big spread usually. It has a lot of liquidity. That's why I like it.
Yeah, and it's a good trading vehicle for sure. And day trading is phenomenal on IWM. And then kind of similar, you could go into futures if you wanted to and trade. What was that one? I lost track. I haven't traded in too dang long. RTY.
Oh yeah, absolutely. Russell.
Yeah. And it's great to be able to. I like to do cross charting, so like I'll chart indexes like this. I often, every day I chart QQQ and use it to trade the NQ because it gives me cleaner price action. It kind of condenses things where they're less choppy, so you can see the primo setups a little easier. So like when the market's choppy and people are tending to sit out, I'm in because I can trade that chop. I'm trading a very short time interval, but I'm using an index to kind of condense things in the 1 and 5 minute chart. So I can go and trade the sub-minute charts. I'm like looking at 1 second and 5 second charts to trade on the NQ. And that's kind of been my MO from the get-go when I started trading futures. And then I look at things like IWM. I'll use that to kind of get ranges on RTY, same kind of deal.
Sure.
And then TNA kind of does the same thing. Only with TNA, I'm making a lot of options income on that thing, so I'll just keep doing it. But
right, like you said, if you can actually have those be free, that's amazing.
And coming out, I mean, with that, my current cost basis. Let me pull that up real quick here. On TNA it's phenomenally low. So running total since March, and I skipped a couple months roughly because I was just tied up with a bunch of other things, so I didn't really actively trade it for a couple months. But the average of the months I have traded it has been right around 18%, which is phenomenal for premium income on a wheel trade. And my current cost basis per share running since March on TNA is $13.68. And that's killing it. My goal is to own it for free within a fiscal year. So by next March, I want to have a cost of zero or negative. That's my goal in life. I have been assigned on both ends of that several times, so I also keep a separate current cost basis on that, and that's even low. It's at 33.10. So since my last assignment, I'm walking through that. But overall premium earned since March is keeping my cost basis down to that 13.68 level. So I don't trade the wheel trade in a traditional way. I'm a lot more active with it, and I don't mind getting assigned on it. The traditional way is to sell the edges far enough out of the money to where you're kind of trying your best to eliminate assignment risk, whereas I take advantage of it because I'm getting a cost basis that is lower than the strike price because of the premium I earned on the contracts. So I look to try and sell stuff for about $1 on the edges of volatility. And the way that works is if you got a big broad pattern like this on the daily chart, you go and get paid if you sell the edges. And the angular is right here. So I sold a put the other day and bought it the next day and pretty much sitting flat because I'm waiting for this consolidation. This may give us a breakout move and it may not. If it doesn't, if we start threatening this gap here, I'll start looking to sell, either 38 or 39 strikes very soon. But if this breaks out and starts to eat a reversion trade on the current previous trend here, I'll be more apt to looking to sell 44 and 45 strike covered calls on this thing, which is about the mean of this previous consolidation in this descending channel here, or this trend here. So if I break it down to the 2-hour chart, this is kind of where I focus, and I'll print a pivot on there now. When you get to doing enough trading on price action, you don't necessarily need to draw a dang thing. You just kind of know where it is.
Know where it is. Yeah, I'm with you there.
It's like you let your lizard brain do the work. I say that.
Oh, because sometimes too many lines get in the way. Sometimes a little less clutter is better.
Yeah, I like a clean chart, and you get too overwhelmed with a bunch of lines on it. It works great for day trading. I mean, don't get me wrong. I'm drawing all over my 1-minute charts, my 5-second charts, and sometimes my 5-minute charts. But when it comes down to something I'm generally involved in for long-term stuff, cleaner is better. But current reversion for this whole trend high to low is right around 44.5. So I'll be looking, if this bounces back up and we get a breakout trade above this short-term mean between yesterday and today, we break above 42 at some point. That's where I'll be looking for a move up to 43, 44, and then I'll be selling that edge. So kind of walking between these two lines is where I like to be. And essentially this thing has, just such a phenomenal performance for premium return for me, but I have to have a really strong grasp of price action analysis to maintain that. If I was to just jump into this thing blind and just start selling calls and puts on the thing, I'm not going to yield 18%. No way in hell. No. I'll get maybe 5%, which is still pretty good. You're still going to outperform the market on that, but in general, if you've got a good grasp of price action and you become a good day trader, you can utilize that for being a good swing trader. And then once you get good at that, then you can be a good option seller, because you can kind of combine all three strategies. And that's where I actively trade the wheel instead of passively trade the wheel. So yeah, it works for me, and I love talking about it. So
yeah. No, for a good reason. It's worked. When you find, I think we're all that way. When we find what actually works for us, you want to share it. You want to tell people, hey, this is what I do, and look at the results that I'm showing you that work that way. I'm quite a momentum trader for breakout continuations, using, resistance turning into support and things like that I'm looking at. And I'm big on VWAP on a 3-minute chart, because I'm more of a day trader than a swing trader on a lot of these. And they just, it just proves out time after time. And when you do it, what happens is, those of us that have been doing it for a few years, you've seen it. Yeah, there's going to be the times it doesn't go your way. You can have the perfect setup and it might not go, but as long as you're following your set schedule and you're doing your stuff the way you're supposed to, and, consistently, you're going to win more than you lose.
Exactly. It's the old adage: plan your trade and trade your plan. Don't deviate. Eventually, Absolutely. if it's something you found to work, it may not always work, but consistency is key. So if you're winning more than you're losing, you'll still be profitable, and you'll still be around to trade another day. And that's kind of the bottom line on that. You've got to be able to stick with something. That being said, though, I'm always kind of also saying things that kind of echo through the work, if you would. Occasionally, you'll run across something that it's like something flashy, or if you're from a dog's eye view, a squirrel runs by. Yeah. You'll get these really popular, proprietary indicators, and then people will build a platform on them, and then they'll sell membership to the platform so they can give away a bunch of call outs and stuff. And they work great for the first 6-8 months. And then suddenly, if a bunch of people get involved in it, the market tends to adapt to it. It's kind of funny how that happens.
Right. Well, because the big money is looking for those patterns.
Exactly.
If they have computers that are set up that are looking for certain patterns, and when they see it, they change. They try to change it. That's why it's funny. I do think it's how many ways can you peel an onion, so to speak, right?
Right.
Is a lot of the stuff that traders do that is supposedly new today was stuff that Jesse Livermore and these guys were doing back 50 years ago. When you talk to the guys from CMT, Tyler J. Woods, those guys, they'll be like, yeah, this is just a different take on this. I don't have that, immense encyclopedia of knowledge to pull those out of my, butt that quickly, but they're able to say, yeah, that's just a take on this. That's just a take on that. We're not reinventing the wheel. We're just fine tuning it.
Right. And then, and when it gets trendy, it's going to be like a fad. It goes in and out of style, plain and simple.
Yeah, they do.
And I found that the more influenced the market is by those kinds of things, the more frequently and more accurately you can read just a simple mean reversion and measured move strategy. And that's a lot of what I do with price action. And when you see me drawing boxes, it's exactly that. I'm looking for measured moves and half back reversions, sometimes quarterback reversions, sometimes half measured moves, whatever. It's all the same. And even here you can see, there's a primary, an accumulation, and a secondary. And the secondary matches about where the primary size was. It's that simple. The more the market is influenced by all these different fads, all these different trends, all these different groups of people in mass following a specific thing, the more frequent and accurate these things become. And when things are flux, you can see there's a hard to read trend here. But if you stack it, you have many primary secondaries. So it just, things fell out of style for a moment there. Everybody was saying the sky was going to fall. All the Chicken Little crowds came out and said, "Oh my God, don't trust this rally. This is going to pull the rug out and make you broke, whatever." That's when they were saying these things back here quite a bit frequently.
Oh yeah.
And you see that trend. It doesn't have a lot of obvious strength in it. It's very untrusted when you got wicks, you got consolidations, but overall, it's just more of this, just on a shorter time frame. This was a longer time frame. That's a shorter time frame. Little leaps and bounds, and eventually it peaked out and came back down. Those measured moves were easy to spot. And all it is tuning into the right time frame to find them and trading it. And I think
another part is that a lot of traders that it seems like you do, I've noticed, is you focus on a smaller breadth of tickers, and you tend to learn how they move also. And I do think that you start to see those patterns a lot better.
Absolutely. And it essentially just it trains your lizard brain. I mean, you just use your instincts, and you just kind of know what you're looking at. You know what you expect it to do, and eventually you become so in tune with it. I mean, you could you could lay any sort of data over it and still see it.
Yeah, it doesn't matter, right? I can look at somebody else's chart with 700 lines on it and still say this is what I'm seeing.
Exactly.
Yeah, I'm with you. I that's for me is pivot points and resistance and support are big things that I look at. And give me 30 seconds. And I've seen you do it where someone will ask us in one of the Slack rooms we're in, hey guys, can you take a look at this? We'll get back to it in 10 seconds because I'm not breaking down my trade. I'm just saying, hey, this is what I see today. Boom, 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 boom.
Exactly. And when you get to a point where you can glance at a chart and you can already pick out everything like that, you've arrived. Then it's just a matter of execution, plain and simple. And
that's where you get that confidence too. You stop second guessing yourself, and that takes a while to do it. And again, you have to have an understanding that you're not going to go 1,000%. Nobody's ever gone 1,000%. What we're trying to do is just win more than we lose, and risk management. Have the proper risk management. You don't even have to win more than you lose. You have to have the proper risk management to have the right risk reward set up, so that even if you come in at 48, 40%, it's a winner.
Exactly. And, I always pride myself on telling people, whether you're on paper or just using really small amounts of cash to learn how to discipline yourself to trade live accounts, whatever it may be, go play with those, 1 and 5 second charts and look for these. And when you learn that you're going to get a lot of repetition out of this, you're going to see it so many times in such a short amount of time that it's going to train you faster. You start looking for those measured moves and those reversion trades on a time level that is that short, you're going to get really good at it in time. So I always pride myself on telling people, go practice that, whether it's paper or real money, just small amounts. Don't take a lot of risk in it, and learn that. And once you master that, expand it into every time frame, and it all works the same. And
Yeah, absolutely. That's a great tip. I also think that joining some of those where you see those paper traded things, but they have contests, are
right,
great because it keeps you involved. Sometimes people start to paper trade, it goes one way or the other, and they just sort of stop. What happens is there you get the competition in your head too, and it gets you in that real feel. You don't have to be doing any money. It's more for pride, but
right.
it gives you that same skin in the game, I would call it.
Yeah, and it just detunes you from being emotionally attached to money and second guessing yourself and FOMOing things. It purifies things to where you're more focused on trading the chart, and that's where you should be anyway. Trade the chart. Don't worry about all the numbers attached.
Yeah, absolutely.
Yeah, it's a lot less stress too, and when it's fun and gamified, it's even better. That's just melts the stress right off of you. Go join a
It does.
contest.
It definitely makes it more fun.
Oh, we should start doing challenges in our live streams. I think we could do that.
Yeah,
Like, all right, guys,
absolutely.
let's paper challenge each other and see who can win. We have to have
Yeah,
prizes.
that's always fun. I even love with some of the live streams that we do. We'll ask the people that are watching, what do you think the SPY finishes at today? What do you think QQQ finishes at today? And you can have a fun contest and give a little swag like a Prosper shirt, a Quasar Market shirt, something. We'll have to get that built in. I'll have to talk to Steve about that.
It's a lot of fun. Was it last week or the week before? I had the folks from the Big Short platform come on, and the founder and developer who put that whole platform together from scratch. Essentially, he's an options day trader. He day trades SPY almost exclusively with options. And we got to talking the night before. I was going to have him on as a guest, and it came to a realization that him and I are the same but different. He trades a lot of options flow data to kind of find his targets and stuff, and he also sees like specific areas where big money's selling into a trend to generate liquidity, stuff like that. But overnight stuff he doesn't do, and that's perfect. That's the rule of a day trader: is you're flat by the end of the day, you're done. And I go and I told him, like, I see SPY opening at around a certain level the next day, and he's like, yeah, maybe. I think it might pull back first and stuff. I'm like, okay. So opened up, we get on the call. He's like, damn, you were dead on. Yeah, that was just basic price analysis, and
Yeah, for them though, for people that are doing that, they can't have an overnight position.
yeah,
It just opens up too much risk for because he's doing naked options.
Yep.
So you can't, because you have no access to it. It also
Right.
drives you crazy as a trader.
Yeah, you lose sleep.
For some of that, yeah. So that's more what I think on some of that there is part of it too.
And anything I do that's more than overnight, I'm doing it with a spread. So my risk is so limited, and I'm on the fringe of the edge, not just the edge, but like if you look at some of my killer Tesla trades from the past, I mean, I'm trading spreads that are $5 wide for like 4 cents. No one does that. But I mean, when I come out with a 2,400% return, and I did it in bulk, I did a few hundred blocks of those. That's when they're like, oh, that's kind of not many people doing that. Most people would take the same amount of money and put it into something close to the money, and at least spend anywhere from 50 cents to $1 on a $5 wide spread out of the money like that. Not me. I'm way different, but I use price action to do that.
That's the perfect example of risk reward,
Yes.
where you have unlimited reward. Your risk is 4 cents a contract or whatever it might be.
That's
So
nothing.
you can afford to do that. If you hit, like we talked about last night, you hit 1 out of 50, you're having a great month.
Hell yes.
So that's the idea. That's where what you want to look for is that you're managing the different parts of your trade. For you, it's a risk reward factor, and you're willing to lose 40 of those in a row because the one you do hit is going to more than make up for a couple of months of losses.
Oh yes. I mean, in that case, that would have been over a couple of years of losses in that particular one.
Yeah.
But it's the same. I mean, I started trading with a very small amount and snowballed it into some decent working capital now. And it took a lot of time, but that's a lot of it is I pride myself on being not only a prudent trader, but a frugal trader. I'm, in a place where I'm sticking out very little risk for massive returns. And when I'm right and my price action's been pretty good, I'm really right. So it's just a matter of I can take a few losses on those small ones and not even bat an eye at it. I've had entire things go to zero where I've had like 100 block of like 2 cent, contract spreads that I've traded on SPY and Q over the years that just they fail. But then I make one where I risk 2 or 4 cents on it and come off with like $1.80. That's more than a home run. That's like batting a damn ball around a planet a couple times.
Without a doubt.
But it just takes a couple of those, and you don't really need to sweat the losses at that point. It's still being frugal. It's still being within. It has a hellacious outlook, mind you. I'm not targeting 2,400% returns. I'm targeting 100% or better. But when you get the right one, it just goes insane. All right, quick review on a few things we looked at last week and on Tuesday. A couple of them that were important to look at was Oracle, and this thing has just been balling, dude. Parabolic trends are one thing, and we know that they tend to eventually come to an end and give a half back. But this last one here is, phenomenally hardcore parabolic trend and gappy to boot. So we looked at this liquidity zone. We called out. We were like, okay, well, it can make a full-on 1.5 measured move out of this thing and may even hit this 196 target I have way the hell out here. Be prudent in this thing. This is your key zone to watch. It's just previous resistance on top of that bar. It's pretty easy to spot. It came through it, kind of blasted out, almost made a half-step measured move. We're in a quarter anyway, or a third. Came back, tested that thing for support methodically. We always point that out. When we break a resistance point, it's very almost certain that it'll come back and test it for support. Here's the evidence of that on the 2-hour, plain as day. Watch this zone. If it holds here and continues to trend, this parabolic trend is pretty lofty, but it can do more. Look what's behind it. Let me compress the chart back down. There's your primary. This long accumulation bull flag is your build up to a secondary, and half that move is right up here, about 182. So that's a pretty easy to reach goal. It almost hit it. 179 was the peak in the opening today. As far as this goes, I would be very quick to take profit on this next move, because if it's anything like this, it will have very sudden sell-offs to come back and take some of your lunch back. So keep your sandwich. Take the first bite out of it. Don't let the market bite it for you. But yeah, Oracle has been phenomenal in this.
Just an absolute blast.
Another note on it, though, is always look at what it correlates with. It's got a lot of other things in the fire, so to speak, moving this thing. So be cautious on this. Be nimble and be safe. Don't go chasing everyone else's FOMO. And then
this wouldn't be a spot to start a position on Oracle.
No, scalp it, sure, but I wouldn't start along here for anything more than a few minutes or a couple hours at most. That's my MO. This is an area I don't know if I trust this as support just yet, and the market has pretty much said the same thing. It's not sure about that zone. Wait and see. A couple others we talked about. We used to call this Broku, but it's getting interesting now. That's a beautiful cup. Here's your handle. There's your liquidity zone. We break out of this. We got a nice setup in hand.
Absolutely.
We can say short-term target is just above that high, maybe push to $80. But if it walks through a full measured move, we got the sky as $86 as the limit on this move. And I'm thinking 84.50 is kind of a key pivot zone too. If you look left, you can see that's kind of in a range where it had been before. There's been a little gap there. It's probably more prudent to start looking at taking profit around 84.5. But if it overshoots, certainly you can keep a few dogs in the fight and run for that 86 target if you're brave enough. But I would certainly hedge risk at that point at the 84.50.
Yeah. I would say too, if it gets that 84.50, partial exit, look for a retracement back into that liquidity zone you're saying, and then it's on to the races.
Absolutely. And then the other thing to think about in this as well, it does look like a nice cup and handle until it doesn't. So if this thing fails this zone, and
then it just looks like an M.
It looks like an M. that's double toppy M patterns love to eat their gap. Here's your gap.
Yeah.
So if this breaks down and fails, and we're wrong about the bull move on this thing, certainly look for a quick short, or bide your time and wait for support. And if you want to take a long investment in this, there's your opportunity. Market structure has worked out beautifully with this thing. I mean, let me reset the chart. This is way whack. I remember back in the day, I shorted this on this break over here as everybody was chasing this arm here. I shorted it and shorted it and shorted it. I was like the only guy shorting it at first, and then they kind of jumped on the bandwagon and was like, "Oh yeah, you're right. That was an M top. That's one.
That was a COVID darling.
Big ass M top to boot. I mean, that thing was textbook. Everyone else was looking at the daily chart at that time. They did not see it. I was looking at the monthly chart or the weekly chart going, no, that's an M. So market structure, here's your capitalization. This was first range. We were expecting maybe it would consolidate here and do the market structure thing. No, it broke it, consolidated in there. Okay, first squeeze, second squeeze. Here's your second round. This is where your mean reversion is. If it breaks that zone, sure, we can trend. Maybe someday we can see the reversion back to like the 230s here. That's possible, but I'm not holding my breath. I'm going to trade this range first. And, if I got to...
You'd see a few different stock offerings that they'd be raising money with on the way up there too.
Absolutely. They would probably dilute that a little bit, I'm sure. And then the other outlook on this thing is if it's a long term, it does have pretty nice premium on the options chain. I mean, you could theoretically yield about 8% on this monthly with what I looked at for the options yield on this particular one with the wheel trade, but the risk is just a little bit higher than I'd like for that style of trading on this thing yet. If it does trend above this, maybe it'll become a little more investment grade, a little more worthy of a long-term swing, and maybe return to that mean. But just be cautious here. Wait this out. This is going to be a move for the patient for sure. If you start seeing Warren Buffett talk about it, I'd still be waiting a little bit, just to say the least. This is going to be a very tricky area to break out of, and when it does, cool. It'll eventually melt its way through that. But for now, be nimble with this thing. Trade it. It's a day trader and swing trader's paradise. I wouldn't call this investment grade just yet, in my opinion, of course.
I'm with you on that one.
Another one that I threw in an oddball, Matthew was going in on the nuclear sector for all the power needed to run AI. And I get that. It's a freaking phenomenal idea. I looked at some of the little guys, and this one I traded a long time ago and then kind of came back into it. Whenever I scalp a penny stock, I keep it in a watch list I call scalp trophies. It's a mile long. There's like 300 equities in there. But when I do, I keep track of them because later on they eventually do the market structure thing and eventually fall back in line. This was a weird one. They make like enhanced cooling rods for nuclear reactors and such, and market structures kind of had its way with it. Let me pull the monthly chart up. Good Lord. Massively, okay? But I'm looking at a second swing on this thing as far as market structure goes. Look at the weekly chart. You've got your high here, capitalized, blah, blah, blah. Looking a little like a double bottom on the weekly here. So we've got kind of range to trade. And it's a cheap stock. Day trader's paradise made a reversion trade. We called this out. And that's the zone we were looking for. And it nailed it. And then immediately backed off. So is this trade done? Not necessarily. It gave a mean reversion of this whole move here and it's consolidated. It's still got some strength in it as long as it can maintain some momentum here.
For me, I would also point out that former resistance to your left is now support, right?
Exactly.
That's what I'm looking at. Is it bounced off nicely twice off of that support level. That keeps me in that same thesis. I'm still long. That's my thesis.
It's looking good, and I think it'll chop around in this range between like 3 and 320 for a little while, and if we get this, if we watch this for another week or two, and we start to see the cup and handle start to form, this is where I'd expect to handle, and then eventually, if it melts out of this resistance area, it beats this reversion here, we can just start plotting some more bull targets later on. This all becomes primary, secondary measured moves, and then we start looking for that previous, I like to call it the 86.6 fib, previous highs at about 420. I'm not going to relate that to a pot stock, but it's right.
People
there.
like those numbers. Those groups like those numbers. They like those round numbers.
They do. So it's a psychological goal as well as a basic fib, and it's a lofty target from here, but it's got the potential to make that range, and it's a company that's kind of on the backbone. It's like lithium companies were to Tesla and electric vehicles. It's just sort of they are in the supply chain on what's needed to make these things work.
Absolutely, as Steve always says, and I've heard Matthew talk to you about it. You got to look at that supply chain. What do you need to build that? Everyone's talking about Arcadium Lithium because they're the people mining it. But once you have it, what do they need to mine it? If everybody's going to be looking for lithium, then I want to have the company that's building the boring machine that's getting into those mines.
Exactly. You can go and be the guy selling the shovels.
Yeah, absolutely. Infrastructure.
Yep. Selling the shovels and pickaxes to the miners. You'll never run out of business until they dry up. Then you can move. You're only selling shovels and pickaxes. You're not selling heavy equipment.
Yeah, absolutely.
And cooling rods, they're kind of big. If you've ever seen one in person.
Yeah.
But they, if they're going to be a consumable product, there you go.
Well, yeah, if nuclear really does come back, we see what's, Constellation Energy is doing with Microsoft, and that's not going to be the last to try to do this. No. We've seen in Europe and other areas, nuclear is still where, that is green energy. In the United States, it fell out of favor, but I think you're going to see a resurgence.
Yep. And then, we've got fusion technology it's not in its beginning. It's been, thought of for a long time. It's starting to make some breakthroughs. It's still going to take a little time to develop that into something viable. So in the meantime, nuclear fills the gap, or fission fills the gap. But when fusion starts coming out, we'll do the same thing. We'll look at the substructures and see who's in the supply chain for it. It comes around. We've got plenty of things to look at there.
Yeah.
We had another one, ILMN. That thing is just beautiful. Today, it just gapped A to B in our liquidity zone, and we broke the halfway point. Primary move is here. Secondary move is game on, and look for a little resistance, probably up in the upper three-quarter area, around 146, 147-ish. So just be aware that there will be some light resistance there. But if this thing continues to trend, bar for bar, their target's pretty obvious here at about 153. Again, this is revisiting one we called out both last weekend at the beginning of this week, and this thing just follows beautifully. As choppy as this price action is, it's easy to see.
Yeah, that's two good call-outs.
We try not to break our elbows patting ourselves on the back, but when we do, we like to feel good about it. So here we are. And that's why Matthew and I can hold. Overall, since the beginning, since we started throwing shade at Kramer till now, overall, we're still holding a 94% accuracy rating on our call-outs. Not everything that we put on here, but everything we've called price action targets on have followed through with it. That's pretty damn good. So
that's extremely good.
And execution is all that's needed. If you can find really, really good ways to find trade ideas, your execution is going to be where your strength has to build. And
absolutely.
We talk about that all the time.
I got one coming in from a Quasar market request here.
Sure.
They're looking for Palantir, PLTR. Jacob Woods asking us if we could take a look there. Another one similar to Oracle that has just been going sky high.
Wow. I haven't looked at PLTR in a while. There's my dope from Kramer days here. Pretty nice range break out of the mean reversions here. We've got the primary behind. We've made a 1-for-1 and back. This is a bit parabolic too, but you can see there's a bar here you can range. There's your consolidation. Let's start building on that dope here. Let me go to the daily. There's the bottom of that. Earnings. No wonder. Okay. Let's range that to about the mean of consolidation. We're probably looking at a 2 for build-up here. 2 for 1 measured moves. Fairly common, but not as common to follow through all the way. I'll change the shading on these in a moment. When you see parabolic, you kind of wonder if it's going to hit a half move and reject.
Yeah.
And it hasn't quite hit that yet, so we're getting close. I like to put
And that half move, it looks like, will be pretty close to its all-time high back from, I think it was 2021.
I'm going to throw a pivot on that too, I think. Okay, let me go back to weekly. Aha. 45 ducats. That is almost exactly in that half range.
That's what I said. This one hit. I thought when it hit my eye, I said, "This is a Jeremy right to the T."
That is exactly half range.
Yeah,
I love it.
I noticed it when I was looking at it on the weekly. myself.
Okay, well there you have it. Short term, we're looking for 45. I think that's a pretty good shot. And then from there, be a little cautious. 1.5 is pretty common.
Yep.
1 for 1s are all day long. We can find those easily. This is where things get tricky when we're in the in the 2 for 1 range, and usually it's a 1.5 is typical when you see a 2 for. Look for a pullback around there for consolidation. If it shoots through it, I'll eat my hat and say we can run even higher and go for a full 2 for up here to like 49.5 or so. That is possible.
I think you're going to see that, again, what we always, those historical numbers do come back to, sort of bite you in the butt, we'll call it. And it's probably going to hit that, get a little bit of rejection. I do think it's got legs to do it. I've also been looking even on the hourly chart, that 42.70, real nice support here on an hourly. So while it's gotten up there, it's consolidating. And I was looking on the hourly, if you really look, it's consolidated a couple of times here over the last couple of days in a very similar pattern before it made its next breakout.
I'm going to change that a little bit. I'm actually building up a block set on a 2-hour chart, a little higher.
Yeah.
I always split the
nice consolidation,
I always split the consolidation because when I'm trading a breakout on a consolidation, this is some education for you guys if you don't roll your eyes over. You find that if you plot the high and the low and the mean of any consolidation point, you can find your execution to be much easier. And then I like to, when I build a measured move, I'll split that right into the mean, and that's where I'll stack my next block because you get a pretty high probability of hitting this mark, not so much of a high probability hitting this mark. So if I was to range this whole thing, it would line right up here where it's at now. This is key resistance here, 43.70, almost on the dot for this number. But if you run
can see how it played out just above it too.
If you run it like this, you get the same probability factor of the 1.5er is more likely. Eventually, I'll figure out how to set defaults for each drawing style on this app, but for now, I got to do it manually. I like using blue for pivots and lines and stuff, but for boxes, I like gray because it's not as blinding.
Yeah.
But looking for a step out here like 44.20 or so is respectable for 1.5 for the short term. That's the 2-hour chart range. So if you're day trading this, that's probably where you're going to see some profit taking. You'll probably see a wick stand out right about there. And then a pullback and maybe continuation into the rest of the week. But be nimble here. If you're chasing this parabolic trend, you can get burnt pretty quick. And eventually someone's going to take profit. And they're going to be a big someone. And especially in things like PLTR. They're very news risky. They're very trendy with social media talking about it. So it's
right.
One.
They just got added to the S&P 500. That's a big deal. People FOMO in after that. This is already one that operates at probably 90 times earnings, like Snowflake.
Mm-hmm.
So you're at huge, valuations and everything there. You got to be worried about. I will say again on the fundamental side, what I did look into when I was looking a couple of months ago and bigger into Palantir before their last earnings report, is that at their last earnings report, they're moving out of government. They weren't very sexy because they were a cloud name, but they really only had the government as their customer. Right. And they're now moving into the private sector, and they're kicking some butt there. So interesting one to keep an eye on.
That's just a cliche. The government doesn't run things well, but private sector can do it. you know?
Yeah, well, I mean, but what they did is they provide the security for the DoD,
Yeah.
for Pentagon, their cybersecurity. That's what their experts are. This is Peter Thiel's brother,
Right.
and that's what these guys do. So, now that they're going to do it, and we've seen CrowdStrike and some of these other people have problems lately. So they get in at a good time into that private sector to take over that security business, right?
Makes sense. Like
CrowdStrike just cost Delta. What they just come out with the number, it was like $380 million. They said today in their earnings report was their beat down from that CrowdStrike issue.
That was one we talked about too on the show. We're over time right now, but I don't mind if you don't mind.
I'm okay. I got another couple of minutes here.
We're over an hour.
Wow.
CrowdStrike did kind of a perfect move for what we were expecting. Broke out of that liquidity zone, hit the reversion target pretty nicely. This is also, just one big ass wedge, guys.
Yeah.
Look for this move to finish and hit. I'm going to stripe this with another angular is what I'm going to do. We're going to see something like this play out probably. Let me go about here. Split the difference and look at the gap. It's plain as day on the day chart, right to the number. Look for a play to like 333, 334 coming out of this thing. That's a pretty nice little cup and handle looking thing right there, but it's really just a measured move. It takes us about there. So another one that we've talked about many times. We've traded it many times, and we've talked about it on the show many times, and called out price targets on this thing pretty regularly. It seems to always be in play, even when we lose interest in it. So,
yeah.
Being a bit wicky on the 2-hour candles here, so maybe look for one more attempt at this high wave here, and then we'll see if we follow through with our plan. So,
yeah, absolutely.
But yeah, these are it's just another. They're selling shovels to the miners.
Simple. Yeah. Anybody that has a website uses CrowdStrike. Not pretty everyone, but most.
A lot of them, yeah. Okay. All right, well, I'm going to turn into a pumpkin if I go too far beyond lunchtime without eating something. My brain just...
I'm with you there. I'm getting hungry.
I've been kind of on a regimen where I fast breakfast for about 8 months now. It makes it so I'm a lot more sharp in the morning. I can focus a lot better and trade really well. But by this time of day, I'm like burning out. So my brain just... Give me an hour or so, I'll bounce back.
Awesome. Well, thanks for having me, Jeremy. I really had a lot of fun. We'll have to do this again.
Absolutely, anytime. And I'm always kind of looking to provide value for people. So, I mean, when I can bring people like yourself on and just bounce ideas together and anytime you put some good traders together, we hit home runs. So
absolutely. It's, 4 eyes are better than 2, right? And I already have 4 with my eyeglasses.
Yeah, there you go. This is 6 eyes today. All right. We're
there
in
you
business.
Go.
Right on. Yeah, pleasure. And, I think we'll definitely do this again sometime. And you get 3 of us on the show, and it's like it's not chaos. We do even better. So
let me know. I'm always available to join you guys. I love it.
Absolutely. We'll keep you in the loop and keep you in the rotation. So we'll keep guesting you. I like this experience. It's good stuff.
Awesome.
Right on.
Thanks.
Well, we'll see you guys next week. Have a wonderful weekend. Stay safe, especially if you're down in Florida. If you're partying with Big Beat, cool. He's probably got you covered. I think he fared fairly well through the storm. I didn't hear from him yet, but some of my other friends down in Tampa did pretty good. I mean, they got a little bit of wind damage, but they're doing all right, fortunately.
Yeah, he's about 50 miles outside the coast there, so he's not. He used to live in Treasure Island, which was right there. So he's a little further up, and it seems like he's doing okay so far.
Good deal. And again, have a good weekend. I know most of those people will be cleaning things up. I'm going to be